Good evening. Tonight, we begin an in-depth financial analysis for our nation's veterans, specifically focusing on low-income seniors. We are examining a critical juncture, the arrival of new tariff-related dividends and their potential to disrupt established VA benefits. For many veterans relying on the VA pension or income-based health care, a sudden financial windfall is not always a simple blessing. The Department of Veterans Affairs operates under a strict means-tested framework. According to the latest VA reference guides, income is defined broadly as payments from any source unless a specific legal exclusion is granted. This includes common items like wages and Social Security, but it also encompasses investment interest and dividends. As new tariff-based distributions reach shareholders, veterans must understand that the VA generally counts these as recurring income. This is significant because for those in the improved pension program, every additional dollar of countable income could potentially reduce their pension payment by that same amount. Furthermore, the VA's 2026 income limits for healthcare eligibility are now in effect. An increase in annual household income, which includes the veteran, spouse, and dependents, could shift a senior into a higher copay tier or even jeopardize their enrollment in free VA health services. In this series, we will analyze the complex interplay between gross income, net worth, and the vital medical deductions that can serve as a financial shield. Protecting your benefits requires proactive reporting and a clear understanding of what the VA truly considers countable. Knowledge in this case is more than power, it is financial security. The fine print of countable income. In this second chapter of our investigative series, we peel back the layers of the VA's complex income assessment. To the uninitiated, income might seem like a straightforward number on a tax return, but for a veteran, the reality is far more nuanced. The VA reference guide mandates a comprehensive review of all payments, including those often overlooked. For example, did you know that gambling or lottery winnings, even a single lucky ticket, must be reported, or that gifts and inheritances of cash are counted in the year they are received? However, the news isn't all restrictive. Our analysis shows that certain funds are explicitly protected. Federal government-sponsored economic stimulus refunds, disaster relief payments from FEMA, and most interestingly, VA pension payments themselves are never counted against you in a new assessment. This distinction is vital for seniors receiving new tariff dividends. While those dividends are typically considered countable interest, knowing which other pots of money are safe can help you maintain your financial equilibrium. Crucially, the VA distinguishes between recurring and one-time payments. Wages, Social Security, and unemployment compensation are standard benchmarks, but the inclusion of items like alimony and co-op dividends can surprise many. For those transitioning into a season of life where inherited property or capital gains come into play, the fair market value rule becomes the standard. Understanding these categories allows veterans to navigate the reporting process without fear of accidental non-compliance. The 5% Shield, Mastering Medical Deductions. Tonight, we uncover the most powerful tool in the veteran's financial arsenal, deductible medical expenses. For seniors concerned that new tariff dividends might push them over the income limit, these deductions serve as a vital financial shield. The VA allows you to reduce your countable income by deducting paid, out-of-pocket, non-reimbursed medical expenses. However, there is a catch, the 5% threshold. To be eligible for deduction, your total medical expenses must exceed 5% of the VA maximum annual pension rate for the previous year. Let's look at a practical example from the VA guides. If you paid $8,000 in medical expenses and your deductible limit is $775, you can subtract a staggering $7,225 from your reported income. This could mean the difference between losing a pension and keeping it. The list of what you can deduct is surprisingly broad. It ranges from common costs like Medicare Part B and D premiums to specialized items like hearing aid batteries, dental cleaning, and even the maintenance of a seeing eye dog. Even transportation for medical purposes, calculated at 41.5 cents per mile, can be added to your total. By meticulously tracking every pharmacy copay and doctor visit, you aren't just managing your health. You are actively lowering your reported income and safeguarding your benefits. Life events, deducting funerals and schooling. Financial planning for seniors often involves preparing for difficult transitions. The VA provides specific relief for these life events through unique income deductions. One of the most significant yet somber provisions is the deduction for funeral and burial expenses. When a spouse or a dependent child passes away, the VA allows the veteran to deduct the entire amount of final expenses paid out of pocket. For example, a $5,500 funeral cost can be deducted in full, directly lowering the veteran's countable income for that year. Furthermore, for veterans who are lifelong learners or seeking new skills, educational expenses are a powerful deduction, though this is specifically for the veteran only. Tuition, fees, books, and necessary materials can all be subtracted from your income total. However, it's important to note a key distinction in the 2026 guidelines. While medical expenses can be deducted for the whole household, educational deductions for healthcare eligibility apply only to the veteran's own training, not their dependents. These life event deductions are more than just line items on a form. They are a recognition of the financial burdens veterans carry, whether it is the cost of a pre-need burial plan or the price of textbooks for a vocational course. These expenses are designed to ensure your pension reflects your true financial need, not just a gross number on a check. The burden of proof, documentation, and receipts. As the saying goes in the VA world, if it isn't documented, it didn't happen. Tonight, we look at the burden of proof, the meticulous record-keeping required to protect your benefits from new dividend income. The VA is very specific about what constitutes proof of payment. A common mistake many seniors make is submitting a handwritten list or a personal ledger. Unfortunately, the VA reference guide states clearly that these are not acceptable. To successfully deduct an expense, you must provide proof of paid expenses. This means you cannot simply show a billing statement that says amount due or please pay. Instead, you need documents that confirm the money has actually left your account, such as an itemized yearly payment history from your doctor, pharmacy, or insurance company. For those using medical transportation, a signed and dated mileage statement is required, which the VA then multiplies by the current rate of 0.415 per mile. If you are paying for nursing home care, you'll need a licensed physician's statement confirming the care is medically necessary. We recommend calling the VA billing department directly at 866-812-0318 to request a formal payment history of your prescriptions. Remember, the goal is to show the VA a clear, verified trail of your financial reality. Real estate and inheritances. The life estate paradox. Inheriting property is often seen as a windfall, but for a veteran on an improved pension, it can create a life estate paradox. A life estate is a unique legal arrangement where you have the right to live in and control a property for your lifetime, but you do not own it outright. The central question for the VA is, does this count as income? According to a landmark VA General Counsel opinion, the value of an inherited life estate is generally not considered income because it cannot be readily converted into cash to meet subsistence needs. However, and this is a critical distinction, the value of that life estate is counted toward your net worth. If the property is your primary dwelling, it is excluded from the net worth calculation. But if it is a secondary property, it could push your total estate above the VA's limit, potentially barring you from pension eligibility. Furthermore, while the property itself might not be income, any money you generate from it, such as rent or profit from selling crops, is absolutely countable. This means that if you inherit a family farm and start collecting rent, that new income could reduce your VA pension dollar for dollar. Navigating these waters requires an understanding of 38 CFR paragraph 3.275, which defines what real and personal property the VA considers part of your estate. Tribal sovereignty and benefits. The $2,000 rule. Our analysis turns now to a specialized but crucial area of VA law, the treatment of Alaskan Native and tribal income. For Indigenous veterans, the intersection of tribal sovereignty and federal benefits is governed by the $2,000 rule. Under the Alaskan Native Claims Settlement Act, ANCSA, and the Per Capita Distributions Act, many distributions are treated with a unique level of protection. The rule is straightforward but powerful. Cash dividends from a Native corporation or per capita distributions from tribal trust lands are not counted as income or resources, provided they do not exceed $2,000 per individual per year. This means a veteran and their spouse could potentially receive up to $4,000 in certain tribal payments without it affecting their VA pension or healthcare eligibility. However, any amount above that $2,000 threshold becomes countable income. It is also vital to distinguish between settlement payments, which represent compensation for land claims, and business dividends. If a native corporation pays out dividends based on its own business profits, those may be treated like any other stock dividend. For those receiving these funds, the VA requires an inquiry into the underlying basis of the payment to ensure it falls under the legal exclusion. This ensures that tribal heritage and federal service are both respected. Healthcare access. The 2026 thresholds. As we move into 2026, the landscape of VA healthcare has changed. The VA has officially updated its national income thresholds, and for many veterans, this will determine their out-of-pocket costs for the coming year. These limits are not one-size-fits-all. They are highly localized, depending heavily on where you live and the number of dependents in your household. For seniors receiving new tariff dividends, checking these 2026 limits is the first step in proactive planning. If your total household income, including your spouse and dependents, falls below the threshold, you may be eligible for free VA healthcare and medications. If you are already enrolled and your income changes, you are obligated to report the update. The VA will then review your current financial status and may adjust your copay tiers accordingly. It's important to remember that some veterans are eligible for VA care regardless of income, such as those with a high disability rating or Medal of Honor recipients. But for everyone else, the means test is the gatekeeper. Use the online tool at va.gov to check the 2026 limits for your specific zip code. Being even $1 over the limit can move you from Priority Group 1 to a group with higher copays, making every medical deduction we've discussed more critical than ever. Behind the scenes, VA, IRS, and SSA verification. You might wonder, how does the VA actually know if I'm receiving these new dividends? The answer lies in a high-tech process called computer matching. By law, the VA is required to verify the income information you provide. They do this by cross-referencing your reported numbers with the records of two other powerful agencies, the Internal Revenue Service, IRS, and the Social Security Administration, SSA. Typically, this process begins in July, a year after you report your income. If the data from the IRS or SSA shows that your income, including those new interest-bearing dividends, is higher than what you told the VA, you will receive an information alert. You have 45 days to respond to this initial letter before a reminder is sent. If you don't respond within 75 days, the VA will assume the IRS data is correct and may reduce your benefits or increase your copays automatically. If you dispute the findings, the VA will assign a case manager to work with you. This is your opportunity to highlight the medical deductions or tribal exclusions we've covered. This behind-the-scenes verification ensures the system remains fair, but it also means that accidental omissions of new dividend income can lead to serious debt or loss of care. Transparency is your best defense against a surprise audit. Policy dividends. Choosing your life insurance path. Not all dividends are created equal. While tariff-related stock dividends are typically countable income, the life insurance dividends paid on certain VA policies offer a world of flexibility. If you hold a policy like National Service Life Insurance, starting with V, or Veterans Reopened Insurance, starting with J, you receive annual dividends that are essentially a return of your own funds. The VA gives you 6 distinct options for these funds. You can receive them as a simple cash direct deposit, but there are more strategic choices for seniors on a budget. Option 1 allows you to automatically pay your annual policy premium, ensuring your coverage never lapses. Option 2 lets you buy up additional insurance, which even earns its own dividends and has cash value. Or you can deposit the funds into a VA interest earning account where the interest is currently set at 3% for most policies and is not taxable. For those with existing policy loans, option 4 allows you to pay down that debt automatically. It's important to note that you can only choose one option per policy, but you can change that choice at any time by calling 800-669-8477. These dividends are a unique thank you for your service, and choosing the right option can help you manage your household expenses without adding to your countable income in a way that hurts your pension. The debt dilemma, overpayments and copays. What happens if the VA match checks your income and decides you were overpaid? This is the debt dilemma, and it can be a source of great stress for seniors. VA debt generally falls into two categories: benefit overpayments, often caused by unreported income like our new tariff dividends, and healthcare co-pay bills. The first step is to sign in to your verified va.gov account using id.me or login.gov. This tool allows you to check the status of your debt across disability, pension, and education programs. You can also see your copay balances for every VA facility where you've received care. If you see a debt you recognize, the VA encourages you to pay it promptly via pay.va.gov to avoid late charges, interest, or collection actions. However, there is a word of caution for 2026. Be aware of new scams targeting veterans with overpayment notices. Always verify your debt through the official portal before sending money. If you have a file number or a deduction code from a letter, you can pay by phone at 800-827-0648. For many, the arrival of a debt letter is the first sign that their income reporting needs a medical deduction shield to stay within pension limits. Forgiveness and compromise. Seeking debt relief. If you find yourself facing a VA debt that you simply cannot pay, do not despair. The VA offers several debt relief options designed for those in financial hardship. You can request a repayment plan to spread the cost over time, or even a compromise offer where the VA agrees to accept a lower one-time payment as full satisfaction of the debt. Perhaps the most important option for low-income seniors is the waiver. A waiver is a request for the VA to completely forgive the debt. To be successful, you must submit a personal statement explaining why you feel you shouldn't have to repay the money, perhaps due to an error or extreme financial distress. As of 2026, you have exactly 1 year from the date of your first debt letter to request this waiver. If you believe the debt itself is an error, you have the right to dispute it. If you file a dispute within 30 days of receiving your first letter, the VA will stop all collection actions until they make a final decision. Whether you are asking for forgiveness or a compromise, these tools are there to ensure that a simple reporting mistake regarding your new dividends doesn't lead to financial ruin. Help is available through the Debt Management Center at 800-827-0648. The road to relief, completing VA Form 5655. To access any of the debt relief options we've discussed, you must master one specific document, VA Form 5655, the Financial Status Report. This is not a simple form. It is a deep dive into your entire household economy. The VA needs this to accurately assess how much you can truly afford to pay. You will need to provide a 2-year work history, your total monthly income from all sources, including those new dividends, and a detailed list of your assets. This includes the value of your cars, jewelry, and even any cash you have on hand. If you aren't sure of an item's value, the VA allows you to provide an estimated amount based on local classified ads or online appraisal tools. But the form also asks for your expenses. This is where you list your rent, groceries, utilities, and those all-important healthcare costs. If your expenses change from month to month, like a heating bill in winter, the VA recommends taking a 12-month average. You don't need to send in every single receipt with the form, but keep them safe, as the VA may ask for verification during their review. Completing this form accurately is your road to financial recovery. The Fiduciary Guardian, managing funds for others. For some seniors, managing these complex financial requirements becomes too much. This is where the VA Fiduciary Program steps in. A fiduciary is an individual or entity appointed by the VA to receive and manage your benefits if you are unable to do so yourself. Their primary mission is simple: to ensure your funds are used for your well-being and the well-being of your dependents. A fiduciary has strict responsibilities. They must pay your bills on time, collect any rent or debts owed to you, and even manage your income taxes. Crucially, they must keep your VA funds in a properly titled bank account that is separate from their own money. They are legally required to invest your funds in safe, interest-bearing accounts or U.S. savings bonds. If you have a fiduciary, you still have rights. You have the right to know your account balance, the right to request funds for a reasonable purchase, like a new piece of furniture, and even the right to ask the VA to replace your fiduciary if you aren't satisfied. If you suspect any misuse or financial exploitation, you must contact the VA immediately at 888-407-0144. This program is a guardian for those who served, ensuring their legacy and their lifestyle are protected in their later years. Proactive protection, reporting changes, and avoiding scams. As we conclude our series, the most important takeaway is the power of proactive protection. Your VA benefits are not static, they change as your life changes. You must report any major life events to the VA immediately. A change in address, a new marriage, a divorce, or even the death of a dependent. Each of these can affect your eligibility and your income limits. But protection also means staying vigilant against modern threats. Scammers are increasingly targeting seniors with new tariff-related dividend schemes or fake debt collection calls. Always remember, the VA will never ask for your information over a suspicious link or through an unverified app. Use the Ask VA online portal for all official communication. By combining meticulous income reporting with our medical deduction shield and a sharp eye for fraud, you can ensure that your new tariff dividends remain a benefit, not a burden. If you ever feel overwhelmed, reach out to an accredited VSO. Their help is free and they are certified by the VA General Counsel. You served our country with honor. Now let the system work for you. Stay informed, stay report ready, and stay secure. Good night.